Tran, First Deputy Managing Director at the Institute of International Finance, is joining us. He's a highly respected international economist who joined the Institute after serving as a high-ranking official at the International Monetary Fund. And a lot happened this weekend at the Boao Forum, as I'm sure you're well aware. We'd like to have you in here just to kind of help us break it all down. George Soros made some news by saying that he thinks that the Chinese economy might be in for a hard landing. Your take on that?
I beg to differ. I think that the Chinese authorities have been able to engineer a soft landing to transition growth from the 10% or double-digit growth earlier years to 7.5% target, which in my view is much more sustainable.
He did talk a little bit about the housing bubble, and we had a guest on in the first hour. We said there are concerns there. The interesting thing, though, is as the government steps in here, you're seeing developers and others who are kind of saying, no, they shouldn't be doing this. There seems to be a lot of back and forth. Will the developers, the investors, will the government, will there be some gaming going on? How do you see that thing playing out?
Property prices increases is a problem. It has been a problem for some years. The authorities have taken many measures in the past 4 years to deal with it. Between second half of 2011 and first half of last year, price did decline on a month-over-month basis. But since the middle of last year, they have re-accelerated again to about 1% month-over-month. So I think that that is an issue that the authorities would need to continue to address.
Has the government done enough?
They have taken many measures of a prudential kind to increase the loan-to-value ratio, to increase the capital gain tax for selling houses, to restrict the buying of second home by people living in the city. I think that they will continue to monitor and probably do more if they don't see price stabilizing.
Shadow banking also came up in China. What do you see as that? Is that a concern as well?
First of all, the term shadow banking has been used rather loosely, and in my view, a bit confusing and misleading. Basically, what people are referring to is lending and extension of credit outside the banking channel. So if you look at all the lending outside of banks, like the issuance of corporate bonds, like the trust lending, the lending in foreign currency, and so on and so forth, that account for about 30% of total social financing in China, which is around 100 billion renminbi, or about 180% of GDP, so 30% of that. The problem is that it has been growing very quickly over the past year and a half, and that is a cause for concern.
A lot of people are trying to get their arms around growth in China, which is, as you well know, has just been off the charts. The president himself was like, we don't need this enormous growth. And if you were to look at it, what do you think is a good growth estimate for this year?
I think the objective of the government is to have growth around 7.5%. And I think for this year, 2013, they should be able to get it between 7.5% to 8%, which is, as I said before, more sustainable than the double-digit growth that we saw earlier in the decade.
We had a story on right before you sat down here about Australia and this agreement with China. As you look at all the takeaways from the forum, do you see that as one of the most significant, or what do you think are the key takeaways from this forum?
That is a significant development, but it has been in the making for many years. China has allowed the renminbi to be internationalized in terms of allowing other countries to settle trade with China using the renminbi, and Australia is the third country doing so. It has also allowed the renminbi to be used offshore in Hong Kong, in Taiwan, in London, and so on. So I think that the renminbi going forward will play a more important role in the international trade and finance system.
As you look at the country's first quarter, the GDP, if you were to give us a preview, what would we expect?
I think 8% as a consensus view, with equal risk of a little bit better if some of the elements of GDP turn out to be stronger than expected, for example, net export. However, it could also be a bit weaker if the measures that the authorities have taken to quell the increase in property price reduce activity.
Tran, thank you so much for coming in. Certainly appreciate it.
Thank you for inviting me.
A lot of insight.